Evening, guys. How's it? How are you guys? Okay, I hope you guys are well. Okay, Onele, Floyd Mayweather, Lou, Lilita. Okay, I see you guys. Lerato, Domhuti. How are you guys? Yes, Kia. Thank you, guys. Thank you, guys. So, okay, yeah, thank you, guys. So today, what we're touching VAT, guys, value added tax, right? So one thing I noticed about value added tax is that for the test, most people are going to struggle with the format of the answers. You're going to be doing your own thing, right? So today I'm going to get straight to the point and show you how to do a basic VAT calculation. What did I say, guys? I said I'm going to show you how to do a basic VAT calculation, right? So today is day one of me teaching you how to do a VAT calculation, right? So remember that VAT can be asked either as theory, it can be asked as journals, right? Which is accounting, and I personally hate accounting, but you have to adapt, right? Or it can get asked as the, what's this? As the calculations that I'm gonna show you, right? So if you are also like me and you hate accounting, you don't want to be a chartered accountant, yeah, please, if you find a channel there, just be strong, right? So okay, what else did I want to say for admin? Okay, yeah, as I was saying, today is the, what is it? It's basically me introducing you to a VAT calculation, guys. Obviously VAT has rules and exceptions, okay? So after today, you are going to be able to calculate basic VAT calculations, right? So the basics, that's what I'm teaching you today, right? So let me stop talking too much and let me actually show you. So I think you guys can hear me. I also believe that you guys can see my screen. So let's get into it, right? So another thing, please don't, what can I say? Please don't underestimate VAT, guys. Please don't underestimate VAT and tell yourself that you're just gonna focus a lot more on gross income. Trust me, gross income can disappoint you. You will think you know your case laws, and then you'll see that you actually don't know your case laws, right? So don't take anything for granted in tax 2AB, especially VAT. You cannot take VAT for granted, right? I know VAT actually has a reputation for being one of the easy topics, right? So don't take it for granted, right? It is easy as you get to doing it and as you familiarize yourself with the question banks and all of that, but don't take anything for granted, right? Take the calculation seriously, take the theory seriously as well, because if you don't know the theory behind that, you will not be able to do the calculations, guys. And you can get zero by doing all the calculations, but because you didn't understand the theory, right, you are going to use a wrong figure and get zero out for that. And imagine how painful it's going to be when they're showing the top 10 after the test one and you are there with your 30%, right, because you didn't follow an instruction or because you didn't understand your theory properly, right? But that's not going to be you. That is not going to be you, trust me, right? Okay, so for today we're just going to be doing basic VAT calculation. I'm going to tell you guys the difference between VAT and income tax. VAT is not income tax, guys. VAT and income tax are completely different things. So don't find yourself in the test applying VAT principles to gross income. Similarly, don't find yourself applying gross income principles to VAT. They are two different things. VAT is from the VAT, what's this? The VAT Act, right? And income tax also has its own act, right? So for today, we're just gonna differentiate between the VAT Act and the Income Tax Act. Then after that, I'm going to show you the calculations. So I hope you guys have your calculators, right? So if you don't have your calculator, please go fetch it now. I'm just gonna give you a minute so you can fetch your calculator and your notebook so we can start working, guys. You're writing on the 17th, we need to start working from now. So if you don't have your calculator, can you please just fetch it? I'm starting in a minute, and a notebook or somewhere that you're gonna write. Also, the lesson will be uploaded, but I have to edit it first, guys, and editing actually takes a long time. Yesterday, editing showed me that, you know, I have to give more credit to our Instagram influencers and stuff, because editing actually chops, but I actually managed to get a hold of it. Okay, let me give you guys Okay, I believe most of you have your calculators by now and a piece of paper or a notebook, right? Let's get started. So as you're gonna see, there's a lot of things we're gonna have to learn. You're gonna have to learn the types of supplies, right? There are some goods and services that when you do the calculation, you're gonna use 15%. There are some goods and supplies that they have VAT, but their VAT rate is 0%, right? So the final answer is gonna give you 0. And then there are some supplies that exempt. This means that it does not have VAT at all, right? Time and value of supply, we're going to get into that as well. And as I mentioned, this can be tested as a calculation, as a journal, as a theory, or all of them at the same time. Depends on the luck, right? So also, please be a magician to be immune to magic tricks and stay consistent. This module is not difficult. This module is tricky. This module is tricky. It's not difficult. So if you don't understand, right, you fall under the spell of the magicians. Who are the magicians? The magicians are the lecturers, right, and the people who set the papers, right? So that's why you're gonna fall for their tricks, right, if you don't actually stay consistent and you don't understand your theory and basic principles. So here it's all about basic principles, guys. Here is not cramming, passing and forgetting. Here is not doing aha method. What is aha method? Aha method is me coming here and doing this. It's doing this, then okay, they said patches what, and then you go check the memo. Then you're like, oh, okay, without actually attempting. Guys, I promise you, if you do that, it's chai for you. If you've been using aha method, you can touch, but not here. Maybe accounting, you see. Accounting, if you do all the past papers from 20 something, you can touch. But here, you need to know fundamental understanding, fundamental principle, guys, because I want you guys to carry that as well into your taxation 3, guys. I want you guys to carry that into taxation 3. I'm always going to emphasize this, guys, that this work that we're doing now, no one is going to teach you this work next year. I guarantee you guys, no one's going to teach you guys this work next year. So please log in while it's still now, right? Okay. So this is the structure that you're going to need for a VAT calculation, guys. And what was painful for me is that I only knew the structure after writing the test and getting a horrible mark for test 1, right? So that's the first time I saw the structure and I was like, why wasn't I made aware of this in class, right? I was not made aware of this type of structure. I was not made aware that I'm supposed to follow this structure, right? This is the structure. Hence, this is the reason why I'm starting with this, guys. This is the structure to answer a VAT calculation. If you don't answer it like this, guys, you're going to get 0, guys. Because remember, the people who are marking, they're marking under pressure as well. In first semester, there's probably 1,000 of you guys doing tax 2AB, right? So tutors are marking, all these people are marking, and they want things to be in a proper order. So if you're going to do your own things now, you're going to have to be chasing Matsepo or chasing vessels to get a remark, right? And we don't want that. Let's avoid that at all costs, right? Get a remark if you are actually feeling like you were you got an answer wrong and it was unjustified actually. So this is the table, guys. You draw this table when you get a VAT calculation. You draw this table, not with the pencil, with a pen. We're no longer in grade 1, guys, that you're gonna come with the pencil and you're gonna do calculations with the pencil. Guys, we are old now, right? So if you have a pencil, please don't put that pencil anywhere on your script. Rather use your pencil on your question paper, right? Also, when you are calculating, show your calculations on the script. Don't do this thing in like we were doing in metric of saying, let me start my calculations on the question paper and then I'm gonna transfer. There will be no time to transfer. I'm telling you, there will be no time to do that. Test 1 is only 60 minutes, and that 60 minutes, it is going to fly by so quick. you'll be doing VAT and they'll tell you that there's 15 minutes left and you haven't done gross income, right? So this is the structure. You draw this table, guys. It has 4 blocks. It has 4 blocks. You come here, you write transaction. The transaction is what is happening. Obviously, guys, VAT transactions, they're going to tell you that, let's say, Sipho said to purchase eggs at ShopRite, for example, right? That's the transaction. So here, you come and write what's happening, guys. This has no mark. This is for your purposes. This is for you and also for the marker not to get lost, right? But this section of the block, it doesn't have any marks. So this is you telling the marker, or this is for your purposes actually. You are going to note down, okay, this is what is happening. Or this is transaction 1, sale of wheat or purchase of furniture, right? So that's what you are going to write here in the transaction block, okay? Then the way I put it here, reason or calculation, input, output, right? So for these two, you can put output this side, input this side, but I prefer doing things this way, right? But just make sure that it is labeled. Your table must be labeled. For the guys who just joined, I was saying that we are no longer grade 1s, guys. You're no longer grade 1. If you have a pencil, please give it to your sibling or to your nephews and all of that, right? We don't use pencils here. You draw with a pen, guys. So this is your table that you need to have. Transaction, right? Reason or calculation. This block here is where you're going to put the calculation, right? It's either going to be a calculation or you're going to put a reason, right? Because as I mentioned, VAT has its own rules, guys. VAT has rules. So for example, right, if you find maybe a transaction for a 0 rated good, right? A 0 rated good, or let me say an exempt supplier, for example. What's an exempt supplier? We will get into that. But if that particular transaction was exempt, your reason is going to be exempt. What is it? Exempt supply, right? And then you write your exempt supply. Let's say maybe residential accommodation. Then you come here and you put a 0 where there is no VAT, guys. So this input and output block are also important. If something does not have a VAT amount, right, you put 0. You don't just leave it here. If you don't put that 0, you're going to get 0 as well, right? So put the 0, otherwise you're going to get 0, right? So I know it sounds like Greek for now, but please bear with me, right? So if the transaction does have a VAT effect, this is where you're going to do your calculation of 15 over 115 times whatever, right? So for now, I'm still showing you the framework or the table. Guys, NB, do you see how big this is? Nah? You see how big this is, and there's a reason why I'm emphasizing this, guys. I found out the hard way that we're supposed to do VAT calculation in a specific manner. Similarly, in gross income, you are supposed to do gross income calculations in a specific manner within the appropriate blocks, right? So NB, if you are going to fail, NB, you are going to fail if you do not use this format. Stick to the format or get 0 for VAT, guys. And I put this face here to show that I'm actually not playing, right? So you're going to fail if you don't use this format. Stick to the format or get 0 for VAT, right? So I'm only going to be doing this one page, but you're going to see it's going to take us an hour to go through this page, right? So there's someone who texted me, I think yesterday or the day before, and asked me, sir, well, what did she ask? She said, sir, do we have to know these things? Like, this is the VAT Act, what number, section, whatever. For tax 2AB purposes, no, you don't have to know that it's VAT Act number 89 of 1991, right? But for purposes of just being eloquent, right, you can include it if you want to, but I would advise you not to actually know these things, right? Because there's no point just wasting brain space knowing that this is what act, section, whatever. You're going to see there's a lot of sections according to the different tax acts, right? So now we're looking at the Value Added Tax Act. Okay, I hope everyone is with me. So far. Okay, so value added tax versus income tax. VAT and income tax are separate taxes, guys. VAT and income tax are not the same type of tax, guys. So if you've been joining the lessons, the defrost sessions, guys, remember I mentioned that it's defrost session. Why was that a defrost session? Because you guys were at home for 2 months playing on TikTok, playing on Instagram, right? Brain rot, guys. Brain rot, guys. So now we're getting to the serious work. So if you've been joining, you know by now that VAT is an indirect tax, and income tax, or what's this, gross income or income tax, is a direct tax, guys. VAT is an indirect tax, income tax is a direct tax. So in the previous sessions we mentioned that a direct tax is levied on an entity's or person's income. So a person, what is a person, guys? A person is a human being, a natural person, or any other type of entity. What types of entities do we have? We have a company, we have a trust, we have well, what else? A partnership. All of those are entities, right? But the most common entity, right, that you're going to be dealing with in taxation 2B is a company, right? So income tax is a direct tax because it is levied directly on your income. So I even put an example here. I said that SARS is saying, I want a piece of the pie, right? I want a slice of the pizza. So this is a direct tax. Income tax is a direct tax. It is targeting you straight in the face, right? So this is SARS coming to you directly, and they're saying, out of the money that you make, I want a piece of the pie of the money that you are making. I want a slice of your pizza, right? So this is why we're saying income tax is direct. Ibhekane now, ishebani lwena, that lake for you. I don't know Afrikaans proper, guys, right? But direct tax, it is levied or it is charged. Apparently I use bombastic words and fancy English, and if only you guys knew that I grew up in Soweto, so I don't know what people are talking about when they say I use fancy English, right? I always get shocked. So income tax, it is direct. Why it is direct? Why is it direct? Because it is charged on an entity or individual's income. So as the example is saying, SARS is saying, out of the money that you make, right, either from your job, either from your business, from whatever, right, whatever activity that you are doing under the sun, SARS is saying, I want a piece of the pie, Baba. I want a slice of the pizza, right? So think of your girlfriend or boyfriend, right? When you earn or when you get your NSFAS, right, your girlfriend is gonna ask for a portion of that, right? So that is essentially like a direct tax, right? Okay, so VAT is now an indirect tax. VAT is an indirect tax. Why? Because VAT is charged on goods and services. VAT is charged on goods and services, guys. It is charged on goods and services. That's why it is indirect, guys. So for an indirect tax, think of it as SARS is saying, I'm charging you a fee for engaging in specific transactions, guys. So SARS is saying, because you want to sell this Coke 2 liter, I'm going to have to charge you, right? So you're gonna have to pay me money for doing that, right? If you want to sell your house, I'm going to charge you and you're gonna bring that money to me, right? So the money that SARS charges you, you're gonna add it to whatever good or service that you are selling, right? So if you don't understand for now, please just know that VAT is an indirect tax that is levied on goods and services. Income tax is a direct tax that is levied on a person's income, right? So think of Spotify. Why am I saying think of Spotify? Because Spotify charges you for what? For using their application, right? Spotify is charging you for using their application, right? So VAT, basically, it is the tax that is attached to goods and services. So why does SARS have the right to say that they want a piece of the pie of your money, right? Because remember the social contract, module 1, guys. Remember the social contract, that the government is entitled to our money and we are entitled to government goods, services, and infrastructure. That's the social contract, guys. So we pay taxes as persons within the country. And what must the government do in return? They must provide goods, they must provide services, and provide infrastructure, guys. That's why they must provide water. We get angry when we don't have access to water. We get angry when they don't collect the refuse, right? When there's potholes in the street, because we are paying tax, we are complying, but then when the government doesn't do their part, they are not essentially meeting the social contract, right? So let me check, is there anyone who is lost so far? Okay, I know there's so many people now. Is everyone with me so far, guys? Is everyone with me so far? That is indirect. Why is it indirect? Because it is being charged on what? On a good or service, right? Then income tax, it is direct because SARS wants a piece of the pie of your income. So if it sounds like Greek, cram it for now. If it sounds like Greek, cram it for now. But just know that VAT is an indirect tax. Income tax is a direct tax, right? Awesome stuff. The guys who just joined, this session will be posted after I've edited it on the YouTube channel, right? Also, there's something else that I want you to cram for now up until you get to a point where you've matured enough in your taxation confidence to be able to actually understand it, right? So if after I've explained it, you don't understand it, it's fine. Cram it for now. It's the first time you've heard this thing, right? Or maybe not. You did accounting 1B and you learned about that, right? So if it doesn't make sense now, don't worry, it will. You still have to mature, right? You were not a 3-month-old baby eating pap, right? Doesn't happen that way. If that's the case, I don't know, okay? Okay, so when we buy, purchase, or incur a cost, what is to incur a cost? Let me engage with you guys. This is not a lecture. I'm not Mr. Vessels. I'm not Matsepo. Let me engage with you guys, right? What is to incur a cost? When I'm saying you are incurring a cost, what does that mean? When you are incurring a cost, what does that mean? So can someone just unmute or type in the chat, what is to incur a cost? Am I speaking too fast? Those who say I'm speaking fast, can you thumbs up? If I'm not speaking fast, can you thumbs down? Okay, I'm not speaking fast. Okay. Then, what is to incur a cost, guys? What do I mean when we say that you have incurred a cost? So can someone just tell me really quick? Lerato Kumalo, you are appearing here on my screen. What is to incur a cost? You can unmute or just type in the chat, guys. I don't know what's to incur a cost, guys. Serious. No way, guys. No way, no way, no way. To incur a cost, to be responsible, to pay something. Okay. Anyone else with a different view? What is to incur a cost or to incur an expense? When you use money or buy something, okay, yes, Blue says to experience an expense. To experience an expense. Okay, Blue. So basically, guys, when you are incurring an expense, it's English, I know, English chops, English chops. When you are incurring a cost, guys, it means that you must pay. Like when you have an expense, most of you have expenses now, right? So let's say, for example, some of you want to braid, maybe, right? Or Delicious, is Delicious your name, really? Means to suffer a financial loss or expense. Okay, yeah, it's to have an expense, right? So when you are incurring a cost, like I was saying, you know the ladies, they love their nails thingies, right? Going to do nails, 500, and that is incurring a cost or incurring an expense, right? When you pay, right, that nail technician, that is an expense, right? So you have incurred that cost, right? Or it is your expense, guys. So when that happens, it is your expense. When I go cut my hair, right, I pay my barber 70 rands. I have incurred an expense, guys, because I am buying his service, guys. I am purchasing his service. When you go to McDonald's and you buy whatever you guys buy, I'm not really a fan of McDonald's, right? And you buy whatever that you buy, Happy Meal, what is it, Big Mac, nah? When you buy that, that is incurring an expense, incurring a cost, right? So let me not overcomplicate it. When you buy something, when you purchase something, right? Or if you have an expense, if you pay an expense, it is going to lead to an input VAT. So cram this for now, up until you become mature enough to not have to cram it, right? I don't cram this anymore, but that's what I had to do. And then when you mature in taxation, you're going to actually understand, right? So when you buy, purchase, or incur a cost, it is an input VAT. It is called input VAT. However, when you sell, dispose, or receive income, it is called output VAT, right? So when you buy, purchase, or incur or pay an expense, it is input VAT. When money goes out of my pocket, right, into someone else's pocket, that is an input VAT. Money is coming out of my pocket, it is going to someone else's pocket. That is input VAT. Money is coming out of my pocket, it is going into someone else's pocket. That is input VAT. However, now, if the opposite happens, right? If money comes into my account, it is called an output VAT, right? So let me try to show you how you can think about it. This is a sequence, guys. This is a sequence, guys. Another way to think of input VAT, né? Let's say, who can give me an example of a business? What business must I use in my example? What are you? Are you a stationery supplier? What are you selling? Delicious, what are you selling? Delicious cupcakes. Delicious cupcakes, right? So, obviously, guys, né? For delicious cupcakes, Delicious needs to buy what? Delicious needs to buy wheat. Again, Delicious need to buy, no, not wheat, man, flour. You see, us who can bake, I'm selling myself out now, right? So, Delicious need to go and buy what? And buy flour from, let's say, Boxer. Delicious needs to go and buy flour. Yeah, Delicious needs to go and buy flour from Boxer, right? So, what is going to happen here in this transaction? Delicious is going to spend money. 500 is going to leave her account, right? And that 500 is going to Boxer. So Delicious is going to get to the, what was this person? Those people there at the till, right? Delicious is going to get there, pay 500, right? Then take the flour and go with it to where she bakes. Maybe she bakes at home, right? So what's happening here is that she is getting the material to bake and inputting it into her company. That's another way you can think of input VAT. When I get something, right? When I get a material or when I get goods that I am bringing into my company so that I can sell, right? That is an input VAT. Input VAT. I also wish we can have a live session on campus, so that I can make examples with you guys and put you guys in front, right? And so that I can use you guys as my demonstrations, right? But Delicious buys flour, and what does she do with that flour? She's going to use it, right, to bake. So she's gonna input the flour into her company, right? So that is an input VAT. Input VAT. I'm gonna do another session tomorrow only on output and input VAT. But for now, this is just me essentially testing the waters, guys, right? So does this explanation make sense? You go and you purchase goods, and then what you're gonna do, you are gonna input them into your company. So that's one way to think of input VAT, guys. You can either think about it in the terms of cash flow or in the terms of goods and services, right? So in the terms of cash flow, it's, as I said, that money, when money leaves your account, it's input VAT. If you're not going to understand, cram. If you're not going to understand, cram. When money leaves your account, right? Because when you buy, what's going on? When you buy, money is leaving your account, right? To purchase and to buy is the same thing. When you pay an expense, you pay DSTV, you pay whatever, right? Money is leaving your account, hence it becomes an input VAT. That's the cash flow aspect of it, right? So if we are looking at the flow of cash, when money leaves my account, it's input VAT. When money comes into my account, it's output VAT, right? So there's two ways you can look at it. You can look at the flow of goods and services, or you can look at the flow of cash. So do you see that cash flow and the flow of good and service, they work in an opposite manner, right? So let me explain again for the last time, right? When we are looking at the inflow of goods, right? Let me make another example. You go to Small Street and you buy, what's the latest shoe? You buy Air Jordans, right? Because you want to sell them as well. So when you buy those Air Jordans, we are looking at the flow of goods and services first, right? When you buy those 10 Air Jordans, what are you doing? You are inputting them into your company. You are taking the goods, right, and bringing them into your company. That is the flow of goods and services. So because you are taking those shoes and bringing them into your vicinity or into your company, hence it is called an input VAT, right? So input, you are bringing goods or services into your company. That's the first aspect if we're looking at it from a cash, from a goods or services perspective, right? If we are looking at it from a cash flow perspective, which personally I prefer the cash flow perspective because it makes much more sense for me, right? If you are looking at it from a cash flow perspective, when you were buying those fake Air Jordans at Small Street, you paid money. Money left your account and went into Sanjeev's account, right? Or Musa's account. You know those guys who sell. There's a lot of diversity there, right? So your account, your money left your pocket and it went into the other person's account. Hence, it becomes an input VAT. So does that make sense? For now, please thumbs up. If it doesn't, please let's sort it out now. Which one makes more sense? So for you guys, which one makes more sense? The cash flow aspect or the inflow and outflow of goods aspect? Which one makes more sense? So can you guys please just tell me which one for you makes more sense? When you are looking at money or when you are looking at the flow of goods and services? So which one makes more sense for you guys? Okay, Blue saying the flow of goods and services. Yeah, Moach is saying money, inflow and outflow of goods and services. Yeah, guys, we're not the same, right? We're not the same. So you can essentially use the one that you're going to understand, right? You can use the perspective that you are going to understand. Personally, it makes sense for me when I think about the flow of money, because I know that when money goes out of my account, right, it's going to be an input VAT. When money comes into my account, it's going to be an output VAT. So do you see that out and in are going to be opposites of each other? They're going to be two genders, right? Also, the flow of goods and services, if that works for you, that is perfectly okay. I only understood this later during the year, right? The flow of goods and services. It made sense for me from a money perspective. So what was I saying? Can someone please, Blue, can you please unmute yourself and tell me what I've been saying, or what you understand as a VAT input? Because guys, this is the fundamental principle, guys. Input and output. If you don't understand this, you're not going anywhere. How? Blue? You can just type. Can I type? Yes, please type. Okay, while Blue is typing, okay, yeah, now let's leave it for now. Input VAT. So what is input VAT, Blue? What did Kutlwano say input VAT is? Okay, in the meantime, while Blue is typing, let's move to this perspective of what? Of output VAT. So, in the same way that, as I was saying, right, that when money gets out of my account and it goes into someone else's account, it's an input VAT, right? Similarly, when money comes into my account, right? So why would money come into my account? If I sell, right? So as I mentioned, cram. If you don't understand what I'm saying, just cram, you'll be fine. When you sell or when you dispose something, right? When you sell or dispose your goods or services, or when you receive income, it becomes output VAT. When you buy, purchase, or pay an expense, it is input VAT, right? You can also think about it using the flow of goods and services. So for most people, flow of goods and services seems to be easy, but for me, because I'm a slow learner, I have to find another way to understand it, right? So for the output VAT perspective of goods and services, the outflow, right? I am selling iPhones, right? I'm waiting for NSFAS students to get their allowances, and then I'm going to be saying DM for price, guys. Then when I sell this iPhone, it is going out of my company and going to the students. Hence, it becomes an output because I am outputting that good, right? So that's the good and service flow, right? There's also the money flow aspect of it. So Blue is saying that input VAT is when the company purchases or pays an expense. Yes, simple. So for me, guys, personally, this is the simplest way to think about it. When you purchase or when you pay an expense, it is input, right? When you purchase or pay, it is input. When money comes into your account because you sold something, right, it becomes output, right? So when you pay rent, is that input or output, guys? When you pay rent. So can you guys please engage with me in the chat? When you pay rent, is that input or output? When you're paying rent. So in the last 10 minutes, I'm just and we're running out of time, man. Okay, now it's fine. Rent. Is rent an output or an input? When you are paying rent. Okay, I see a lot of people are saying input. Okay, yes, guys. When you are paying rent, okay, Fencer, did you say, let me see. Oh, Fencer had said output, I think. Oh yeah, it's an input. Why? Because you are paying an expense. So you see, it's simple to think about it this way. When you pay an expense, what is it? It is input VAT. Let me make another example. When you pay interest for your loan, is that input or output? When you pay interest on your loan, when you get a loan, obviously you're gonna have to pay in what's this? You're gonna have to pay interest, right? So you paying that interest, is that an input or is it an output? When FNB says you must pay the interest, yes, it's an input, right? Because as I mentioned, when you pay an expense, when you pay expense, input VAT. Simple. Don't overthink it. Don't overthink it for now. When you pay expense, it is input. When you receive income or receive money, it is what? Output VAT. When you pay expense, input VAT. When you receive money, output VAT, right? So obviously, I'm sure as time goes on, it's going to make more sense that obviously, right, when you pay an expense, most of the time it is because you are buying goods and services. And when you receive income, it is because you are selling goods and services, right? So I hope everyone is clear with that for now, right? So can you please just thumbs up if I've been making sense? Thumbs down if you don't, if you have no idea what the hell I'm saying. If you have no idea what the hell I'm saying, please thumbs down. If it makes sense, thumbs up. Thank you. Okay, I hope it's making sense, right? Then I'm not gonna do who pays VAT. So remember, I did mention, guys, that this is one page, but it has a lot of work, right? So this is the tax fraction, guys. What is the tax fraction? 15 over 115 is the tax fraction, guys. 15 over 115 is the tax fraction. So this is what you're going to use to calculate VAT. So the VAT is the amount that you're going to get when you take your tax fraction multiplied by the amount paid or amount received, right? So I made a quick example here. So if you guys can use your calculator as well. Let's say Delicious, right, pays 300 Rand at Boxer for what? For flour. What's the answer? The answer is 39 Rand, right? But for the example that I'm making, is it input or output? For the example that I made. Delicious, right, pays how much? 300 Rand for flour that she purchased at Boxer. So can someone do the calculation there? It's 15 over 115. I hope you have your calculator. I have it also, and I'm doing this. Times 300. 300 is the money you paid, right? So you take your tax fraction multiplied by the money that you paid. Then the answer is 39 Rand. So in tax, guys, you round off, right? You round off or you round down. That's why it's 39 Rand, right? I know it's 39,13, but I rounded to the nearest whole number. So that's how we do calculations. We round off, right? So 39 Rand. So is it 39 Rand input VAT or is it 39 Rand output VAT? Delicious purchases flour at Boxer, right? It cost her 300 Rand. Now you guys told me that, okay, it's 39 Rand VAT. Is it input? Is it 39 Rand input or 39 Rand output? Yes, 39 Rand input VAT. Why? Because as I said, when you purchase, when you buy, right? When you purchase, when you buy, is it coop? No? It becomes input VAT, right? So, okay, when Delicious now, I guess she bought, ne? Now what is she gonna do? She's gonna be selling cupcakes. The total money that she makes, right, was 300, right? So how much VAT is she gonna, how much VAT was there actually if she sold cupcakes for 300 Rand? So use the tax fraction and tell me the answer, and also including if it's gonna be output or input. So what she did first, she bought flour, and you guys told me that if she spends 300 Rand on flour, right, it's going to be resulting in a 39 rand input VAT. So now when she sells cupcakes for 300 rand, how much VAT is she going to pay? So use the tax fraction multiplied by the amount paid or the amount received. So remember guys, to make your life simple, when you receive money, it's an output. When you pay money, it's an input. That's the simplest way you can think about it, right? If you're a slow learner like me, use the cash flow basis. Look at the cash flow, right? If you went to an Ivy League school, maybe, then you can understand the goods and services flow, right? So, guys, when she sells for 300 rand now, is it input or output? What happens when you sell? When you sell, you receive money, right? Hence, that's why it's going to be 39 rand output VAT. 39 rand output VAT, right? Okay, so and we're not going to be able to do all the examples that I wanted us to do because this takes practice, honestly, right? So if you find yourself confused for now, that's good actually, right? Because Vela, this is the first time you are dealing with a VAT calculation in tax 3B, right? But this is the way that it is done. So can you guys really quick just do, where is it? Also, for the guys who've been asking me how you study, in your learner guide, they're going to tell you study 30.4, study 30 point what. That's how you use the textbook. That's how I use the textbook, guys. For you guys, they told you not to do team supplies this year, right? This is text 3. But that's how you use the textbook if you're unsure. Use the learner guide so it can guide you on which chapters to follow. If they say do 30.4.1, skip 30.4.2, don't even look at this. Just make all of it red if you have the ebook. So I need you guys to do 1.2 and 1.4 really fast, right? So what is 1.2? 1.2, it's saying that you purchase parts to manufacture printing equipment of 560,000 per the invoices. So don't mind the invoice part now, we're going to get to that. I just want you guys to know how to use a tax fraction. So can you guys tell me in the chat how much it's going to be and whether it's input or output? So when you purchase parts to manufacture printing equipment, right, how much VAT is it going to be? So take out your calculator, use the tax fraction, and essentially do the calculation and tell me how much it's going to be and whether it's going to be output or input. So it was 560,000, guys. It was 560,000. So let me see if you guys 15 over 115 times 560,000. It's 73043. Yes, guys, it's 73043. You see that we are not lying. Here it is. The answer is here. Here's how they're doing it the way we're doing it. 560,000 times 15 over 115. Right? Do you see that they also rounded down because it had a 478 what, right? But it is an input VAT, right? Because why was it an input VAT? There was a purchase. There was a purchase there, right? You purchased parts. So when you purchase, money leaves your account. You are paying an expense. Hence, that's why it's called an input VAT, right? If you're looking at it from the goods and services perspective, what are you bringing into your company? You are bringing parts into your company. You are inputting parts into your company, right? So that you can manufacture printing equipment. Okay, bank charges. Bank charges. If you guys can do this one, yeah. If you guys can do this one, yeah, you guys are bosses, right? So I just decided to give you guys this one, just to put you in Ivy League status, So Bank charges of 9,800 rand. Bank charges of 9,800 rand. So bank charges. Is it input or output, and how much? Let's see. 15/115 times, how much were the bank charges? Let me check again. 9.8. So bank charges were 9.8. Let me give you guys one more minute. Let me see. Times 9,800. 1278. Yes, you guys are correct, and it is an input VAT, right? So you guys are bosses. Can you please just give yourselves a round of applause there, right? Because bank charges is a bit more expensive, right? So you guys are goats. Yeah, my goats, guys. So quickly, sorry guys, I couldn't do everything, right? I couldn't do all the, I had a lot more examples I wanted us to do, but it's fine. So since tomorrow all of us are going to be lonely, guys, can we have a session? Or you want to cry yourself to sleep tomorrow because you don't have Valentine's date? So if you want to cry yourself to sleep, it's fine, guys. But if you want me to give you the gift of taxation, are we touching class? Or we touching self-loathing? We touching going to sleep alone, cuddling blanket? Okay, session. So the VAT price always includes VAT. We are going to get to that. Good question. The purchase price always includes VAT. We're going to get to that. But the simple answer is no. Sometimes you're going to be given transactions that don't have VAT. That don't include VAT, actually. Yes, on. Okay, session's ending, guys. Thank you for the lovely session. Sharp. See you tomorrow.